Good morning, good morning. Good to see you guys. Sure, yeah, that's good. All right. So we got the ADP report that just got released. We're gonna go over that in just a second here. Let's wait until precisely 8:25 Eastern time, and that's in the morning. And then we'll go ahead and start with our analysis. We'll go over the ADP report, see how that affects the markets, and see how that affects our overall bias. Good morning, Paul. Good morning, Brian. Good to see you guys once more. And now, for those of you that have just joined a little bit early, appreciate you guys for your time, as always. And today, there's a very high chance, high probability, that we will do a giveaway. Okay, there's a very high chance we'll do it today. I just need to get the green flag on that. All right, guys, so just pay attention. I'll most likely throw out some questions to you guys, maybe a little mini quiz based off of the things that we talk about, technicals and that sort of thing. That way you guys have, a reason, more of a reason to pay attention to what we talk about, all right? So, all right, good to see you guys. Yeah, let's go ahead and get started here. And so, we'll start off first just by viewing the chart in hindsight here, and we can see just how well the analysis was in terms of the sells below our areas of interest. Because I remind you guys, yesterday we were more on the bullish side, trying to buy or looking for buys, not trying to buy, but looking to see if we can get buy opportunities above the 45.15s, because we understood that was an area of interest where price action had shown buyers. For example, like right here, buyers stepping in at this area and pushing price back towards the upside. It happened here, it happened here. You can see towards the left, we don't have the zone marked off, but it's above the zone of 45.15s, right? So you can see also like right here, 45.15s, above that area, more buyers were involved. So that's the main idea that we were looking for in terms of following the technicals and that current momentum, right? We understood that the macro timeframes, like the daily, were more bearish still, but we needed to get confirmations from the sellers for us to really be able to validate that bias on the seller side and then look to take more sells, right? And so what we got was candle closures below our area of interest. So we started to see the 15-minute and the 30-minute candles closing below our area of interest. So in terms of buys, that's invalidating our bias because you have strong sellers closing below your area of interest. So at that moment we understood in terms of buys, we need to be patient for those and either wait for further confirmations in our favor or look to adapt to more sells, be on the lookout for deeper pullbacks, at least down into the 4500s, which was this area of interest right here. And we know the 4500s or the 44.95s is that psychological price point that gold has been very close to in the past couple of weeks, right? Like if I zoom out really quick, 4500 is an area, like right here, the 4500s. It's an area that we've gone to a lot of times, whether we've gone there and bounced or whether we've gone there and pushed through it. We've gone there a lot of times, those 4500s. We've talked about that area a lot. Also on the daily time frame, the 4500s, it was an area of support that we were using, right? So again, we can just see, just off hindsight, that analysis played out well once we started to get those candle closures below the 45.15s. And we knew the extension of that move can come below the 44.95s. And as I always talk about, wait for candles to close in your favor so you can get that confirmation from a technical perspective that price could possibly move in your favor, which in this case was on the seller side, right? So you have here candles starting to close below the zone, and then look at how strong that push came. You can see the candles closing below, then you have a nice push towards the downside. Look at the retest. The retest leaves a wick at that area, the 44.95. So it was precisely at that zone that we had marked off. Again, you reject that area. You're not trading above, so not showing signs of buyers being interested in that zone. And then again, you make your move towards the downside. Where's the next target? It would be these lows, 44.75s, which is this area right here, or these lows at the 44.50s. We basically, as you can see, we reached both, right? So overall right there, That analysis played out quite well. We had good zones marked off. So now let's move on to the current price action. The current price action, as you can see, I just moved my zone a bit lower. As you can see, this is the area that price reached, the 44.42s, and this is gold on the 1 hour, excuse me, 44.42s. That's our new area of support that I'm just gonna mark off right there. And then we have a new area of resistance. We could even just move this line right here, just around these highs, where you can see the 44.67s. You have, for example, wicks rejecting that area, staying above. Here you have wick rejections. So a little bit of pushback from buyers around this area until finally you got that push through, the candle closures below, then the wick rejections below that area. Notice how, like, when you see the candles don't close in, let's say, in favor of your bias, where in this case we wanted to close below this area, right? Like when we were pushing down, we wanted to make sure we saw candle closures below the 44.66, because in the past we've seen rejections at that zone. So what do you see right here? Finally, let's say you're waiting for candles to confirm. This is why I tell people, be patient and let the trades come to you. You have your candle closure in your favor. So that right there is your confirmation that you could look to take trades off the 44.66. Look at how price after the candle closes goes and retests multiple times. Like I did it during this candle, which was 2 a.m. So that is just pre-London session. Then during London session, you go once more and retest, reject that area, stay below the zone, and then you make your move towards the downside, even breaking these lows this time, right? So again, those moves, notice how they took place after the candle close in your favor. You get the rejections and you get candle closures still in your favor, for in this case, rejection wicks being left at the 44.66s, right? So again, you follow those clues, and now what we're doing right now is the same exact thing. We still have continued rejections off of this area. And in my opinion, we're not seeing a stronger push because of the fact that we're seeing dollar strength right now, for one. And one of the reasons why we're seeing dollar strength right now can also be this strong report that came out. You see, for example, ADP employment change. Remember, we're talking about the labor market here, and we're seeing a report that's 122K, so it's above 75K, it's above the previous. Right here, you can see this is the economic calendar on Trading Central, which again, guys, it's free to sign up and literally just use that. So that way you can have this easy access information. So again, you have your previous, you have your forecast, and you have the actual. The actual number is well above all of those reports. So that's more considered an optimistic report for the US dollar. And right now, from what we see, it looks like it is having a good enough impact on the dollar for it to push towards the upside. As you can see, dollar's pushing into these highs of the 99.420s. And then you have gold rejecting the highs and now possibly on its way to the 44.40s. And we can really just continue on this bearish structure that we're at. So in terms of the review right there, before I continue and before I go on to like connecting it with the top-down analysis, can you guys confirm with me that we're good on that? We're good on that review. We understand, we see where gold is, we understand why or how it got there at least, right? Let me know if that's good. And also remember what I mentioned yesterday, fundamentals overall, nothing really has changed. You know, we still have continued strikes and continued escalations in the war in the Middle East, which we know has been strengthening dollar since that war started. So let me know if that's just, I just want to get that thumbs up. Ooh, excuse me. AD, I don't know that book, to be honest. But if he teaches price action, and you say that he teaches just like me, then I would just say it's because I stick to the basics of price action. I try not to overcomplicate the concept. I just I stick to the basic things, you know, the candle closures, the candle sizes, candle wicks, the bodies, where they close, where you reject, all of that. Okay, understood. Review sounds good. So this is what I wanted to now connect with from yesterday. Remember what we were talking about the other day in terms of technicals here, that on the daily time frame, below this high right here, below the 44.75s, the daily time frame remains bearish, okay? That would not change until we get a new low get created. For the moment, this is our lowest point right here of like following this daily structure. Like let's say we're following the daily structure. We have this high, lower low, lower high, lower low, lower high, a lower low, right? Even if we were to measure, let's say where the candle closed, right? Let's not even measure the wick. The candle closed at the 44.50s, basically where we're trading at right now. Where that low came from is these highs. So on the daily time frame, like I was explaining yesterday, good morning, Hawkish, good to see you, my friend. On the daily time frame, still bearish. That's why yesterday, when we talked about those buys, we said we need to make sure we get exhaustion and candle closures in our favor, because anything that goes against this bias could just mean we're gonna do deeper pullbacks, and we cannot forget about the macro time frame being more bearish, meaning the sells are still very probable. We were only looking to take buys because of the intraday momentum, okay? 4 hour, same thing, like I explained to you guys yesterday. Above the 4500s was our structure point on the 4 hour that we wanted to make sure we stayed above, because it's this low that was created before we got this high. So that means above the 4500s is the structure point on the 4 hour to stay on the bullish side. That's once again why I said we need to make sure that we stay above not only the 45.15s area, which was just around this area right here. That was the zone that we were looking at during session. We got to make sure we stay above that. But if we break below that and say we still want to hold on to this bullish bias, we need to hold above the 44.95s and the 4500s. Again, we didn't get that. We got 4 hour candles closing back below your zone of interest. Then look at the candles failing to close or even remain above our area of interest. So once again, you had more seller price action back on the 4 hour as you started to break below the structure point. After you broke this low, basically, you can see we're now back at that daily bearish, 4 hour bearish, 1 hour bearish as well. Because on the 1 hour, same thing. In terms of like following the structure where the high came from, it was just around the 4500s area, whether it was the 4500s or a little bit higher, 45.15s. That's the area we needed to make sure we stayed above. But again, we did not get that. We, if anything, got strong pushes below. Let me see, where's the... Right, yeah, 4500s, that was the main zone that we were looking at, mainly on like the 4 hour. The 1 hour now, as you can see, a lot more bearish, but has reached around or very close to an area of interest. So that means for today, we're gonna remain bearish. We're gonna stay on the bearish side, following this dollar upside momentum, following the bearish structure on gold. So we have a ton of confluences still in our favor. At this point, we just need favorable price points for us to take trades. Favorable price points for us to take trades would be these highs that we have continued to reject. So we have, let me zoom in here. And good morning to all that have just been joining. So we have, again, bearish structure, bearish fundamentals. Everything for the moment still seems to be more bearish for gold. So that's what we're going to follow. We're going to follow that bearish price action. We're not going to look to fight the market. We'll be looking for sells off of these highs that we've rejected multiple times. You can see the rejections right there. But right now, because of the volume that we're seeing, we would want to see, keep it simple, repeatable actions. We want to get the breakouts, and we want to get candles to close below our zone of interest, just to make sure that we can get some sort of move like this one, where you have an area of significance that you start to approach, and then isn't until you get this, for example, you have your wick rejection, candle closes above, and you don't get the actual move until when? Candle closes below. That candle right here on the 1 hour on gold, as you can see, closed below the area of interest, like I broke down earlier. You have then candles failing to trade above your zone, and you have your continuations. That's exactly what we're going to look to do. We're going to look to extend our bearish bias by making sure that we break those lows, break below that support, and we'd be looking for breakouts, break and retest off of the or below the 44.40s for continuations following this overall bearish structure. The only way I would look to switch out of that bias is if we start to see no breaks below the lows and candles start to close above this area. For me personally, at that point, I most likely would not really look to take any trades. I would just wait for price action to do its thing, because I would rather wait for price to either get here, maybe close above, but then exhaust, close back below, and I'm looking to take sells back below. Or I'm gonna wait for a deeper pullback into this area of interest where we've seen strong sellers coming from, and then I'll look to sell gold if we can reject for another extension towards the downside, just by following the overall bias right now. What we have to keep in mind is, just like we saw the other day, there could be negotiations, there could be more talks of ceasefire. If we already saw the market reaction, when there's any sort of optimism entering the market in terms of the war that's going on in the Middle East, we've seen the market reaction. We know that that can flip the sentiment very fast. So we have to make sure that we stay on point in terms of like adapting to price action in case something starts to go against us. But again, how we do that is usually through waiting for candle closures, and we let price action do the talking for us. Good morning, good morning. But yeah, guys, we'll keep it simple there. With gold, we just need, honestly, at this point, let's just quickly look at the lower time frames, and then we're gonna switch on to US 30 and review that. Yeah, look at just those, all of those rejections on those lower time frames where you have price just getting there and just exhausting so many times. Like you have the breakouts, price gets there and exhaust. More breakouts, once again a retest, exhaust. More breakout, another retest, still exhaust, and still continues to push lower. So you can see just how strong of a sell area that is. And so that's why I'm looking to take some sort of retest off that zone, if we can reach that area once more and reject for a move towards these lows. If not, we got to break, obviously, these lows right here. I wouldn't really look to take any bounce plays unless price gets here multiple times and rejects, and we get exhaustion at this area. But again, for me, for the most part, I would just wait for the sells to play out. Good morning. AD Fawcett, good morning. If there's anything I can call you other than AD, because we have another AD in here, let me know. So we don't have two ADs. And I had a question for AD, for I Am Great Day. Just how familiar are you with fundamentals? Like if I asked you what are fundamentals for Forex, what would you tell me? Just a question, and it doesn't have to be right or wrong. You don't have to go on Google and try to prove to me that you know what you're talking about. No, I'm just right now off the top of my head, if anyone, not even me, were to ask you, hey, what are the market fundamentals? Like, what do you study? What would you say your focus is going to be on? Like, is it Forex Factory? What is it? Audrey, okay, good to meet you, my friend. So Audrey, I hope I'm saying that correctly. Audrey is how it sounds in my head. But good to meet you, good to have you. I think I saw you here the other day, if I'm not mistaken. But all right, good morning. Hey, Marcia, good to see you. Okay, guys, let's go ahead and we'll be patient. I'm gonna leave an alert on gold just in case we do end up retesting this area. Like even if we go to this zone and we break above it momentarily, like we saw here, I really wouldn't invalidate that bias unless we have like a 15-minute or a 30-minute candle closing above, you know? I wouldn't want to just see price get here and then you break the highs and it's like that's a good enough reason for you to switch bias. For me, it's more so if I'm bearish on all time frames, bearish fundamentals, we have a strong dollar and gold is reaching an area of resistance. I want to see if we can break that resistance, but I want to wait for that because I want to see if we can get the exhaustion, you know, like this, where it's like you have your breakouts. Are you going to chase that move or are you going to wait for further confirmations on the buyer side? You know, I think on the buyer side, it's better to wait for price to maybe make a high, then retest, exhaust, and then look to take a trade. So that way you have more confirmations rather than just, oh, price was approaching a high and I just bought because of that, you know. That's where I would be careful. Audrey, okay, good, awesome. AD, I am great day. I don't know if you heard me. I want to see. I'm just curious because of what you said to me yesterday. If you don't want to answer, it's all good. I apologize. I was just curious. The reason behind the moves are from news, Trump, supply and demand. That's true. But the question the question I'm asking is like, when someone asks you, what are fundamentals? What do you think of? Like, do you just think, oh, it's news and that's it? Because there's categories and there's different things, different focus points when it comes to fundamentals, and that's what I'm trying to get at, to see if everyone here has that understanding. Because I know there's a lot of misconceptions. Like I text some people on Instagram, and especially when I'm texting new people and I have those conversations with them, everybody has almost the same answer, which is, oh, you answered above. I don't see it, to be honest. But it's all good. I didn't see it. Maybe, I don't know. I don't see. Said it correctly. Cool. Audrey, good to meet you. Do you set trading view alerts, or do you watch the charts all day waiting for your move? Nah, I set alerts. I definitely don't sit on the charts all day at all. I set alerts and I only worry about price when those alerts get hit. But for the most part, like these past couple of weeks, really, I've only been looking to trade during New York session, maybe a little bit later. Like I get off the stream around 10:15 in the morning, Eastern time. I'll look at the charts until 11, sometimes 12. But for the most part, you guys have seen a lot of moves take place during our New York session. So at that point, no reason to trade after all. It's just sometimes it's a little bit difficult to go back and forth between managing a trade and teaching. So that's why I'm very selective of what I do and what I am. You know, that's why randomly you guys will see me go quiet sometimes. So, because at the end of the day, I'm here to make money too. I'm here to trade, just as you guys are. So, but all right. Good morning, Veronica. I didn't see your answer, but we'll get into what I was trying to get at in just a second. We have our gold. Gold is doing a little bit of a pullback right now, nearing. It's sort of like, I want to circle that out. On the lower time frames, it's very much this area, more or less, where we see a ton of orders, right? Like you saw it here as well. More or less around this price range of like the 44.65s, 44.60s, more or less. Around that area is where you see like a ton of liquidity get generated, and you have, and you have your moves take place. So it really is around this range that price can reach, reject, and really continue to push forward, down. So, okay, we have gold. That's good. Let's move on to US30 so we don't get behind. And then that way we can do some USD/JPY analysis as well. US30 I haven't touched since yesterday, so let's see what that looks like. Because yesterday's analysis was precise. There was, it was just very aggressive, of course. The bounce plays following the overall bullish structure. But you know what? US30, let's do this. It's a little bit messy. Let's just go ahead and go and do our top-down analysis. So let's start off with the daily. Just get the clear zones out of the way. So we have our highs. We have these previous highs that it looks like price is reacting around right now. So I'm going to take a look at that on the lower time frames, or the intraday time frames, excuse me. So I have, I'm just marking off the clear zones on the daily time frame. So these are lows, these are lows, these are previous highs, and then these are new lows that are getting created. These are highs. Then we have daily bullish, 4 hour bullish, as you can see, highs, higher low, higher high, higher low, higher high. So this zone right here, which is a daily zone, I'm gonna move it to this 4 hour zone right here. So just a little bit above, adapting to the current price action. It still aligns with the left right here, as you can see. It aligns with these rejections, these rejections, these rejections, right? So it still aligns there. So that's bullish as well. So we're bullish on daily and the 4. On the 1 hour, it still looks bullish because we have our high. Where that came from, it's all the way down here. So that means price can go all the way down into the 50,800s, still be bullish on US 30. But what I'm noticing is this very similar to what we have been seeing price action doing, which is it creates these highs and then it does these very aggressive pullbacks. So like you can see it, for example, right here, you have strong pushes and highs being made, followed up by these strong pullbacks. Then you have as well right here, another push towards the upside. This is one candle, one bearish candle, and this is a US 30 on the 1 hour. One bearish candle that completely wiped out all of this right here and did a pullback, right? So again, what I'm pointing out is the aggressive pullbacks that we get. Even after we have such strong moves to the upside, the pullbacks are pretty aggressive. Here the pullback was a little bit slow, but overall still aggressive in the sense that it came all the way to these lows right here. So once again, showing us pullbacks are very aggressive. Then you have your continuation. Here is you have a strong move towards the upside, once again followed up by a very strong pullback, a very aggressive pullback. Here you have another move up, aggressive move down, move up, another move down. So that's what we have been seeing each time. Now we're getting the same repetition right now because we're seeing the move up. You have your new highs that are getting created and you have your aggressive pullback taking place. So what we're looking to see, actually I'm gonna move this zone a little bit because I'm noticing where price is creating this new low. I wanna mark that off, but it's also lining up with these highs right here towards the left, right? You guys can see that around the 51,080s, more or less. It's an area towards the left where we have rejections. And then it's an area where right now the current price action is reacting. A few hours ago, we came to this area and rejected it. And right now during this 1 hour candle, which we have 9 minutes until it closes, it's also rejecting as well. So above this area, I'm gonna stay bullish on US 30. Watch gold because it's around those highs. So be careful in case you continue to see exhaustion. I'll switch back to it. I just didn't want to get, watch gold is what I'm trying to say. Now that it's reaching that area here. We're looking for exhaustion at this zone. If it starts to break above, then we'll be patient and we'll let the market do what it's gonna do. If we have to adapt, we'll adapt, but we'll let the candles decide that for us. US 30, I apologize, let's go back to that. We wanna stay above this zone, which is these lows that continue to get created. And we're gonna look for a repetition of what we've seen in the past, which is we see the pullbacks take place. After the pullbacks take place, we get the exhaustion. So what you got here, what you got here, what you got here. And then you have your continuations. And you also have like these highs that get created that you end up breaking above for further continuations. So in this case, it would be the pullback and the zone down here. But once you break above this high that price created, you make a move up. Here, the same thing. Price action is doing a pullback. You create this high. After you reject and you break above that high, you have your move up. So same thing that we're seeing right now. You can either wait for the aggressive plays, which would be aggressive buy bounces off of that zone, or you can wait for the bounce to take place and you can wait for the further breakouts above your previous high points, which is again this right there, right? For further moves back towards the upside there. Does that make sense? Let me just mark that off again. Break those highs. Don't break those lows. You either go for aggressive bounces or continuations above your zone. That would be your optimal buy zones in terms of price and also momentum, which would be, this is what price point exactly? Yeah, the 51,000, let's call it the 51,090s and then the 51,200s on US 30. Those would be the buy zones. Again, just like we always do, anything that would invalidate that would be the candle closing below this zone, and you have this right here that you could potentially recover, and you've seen it in the past. I mean, look at just how strong of a pullback that is. Even with a very strong, let's say, very strong US 30, it still did a very deep pullback, you know? So we don't want to get blinded by that. And we want to make sure we follow objectively. We know above 51,090s, this is still more bullish. But again, we don't fight the market. We react to it. Anything below that zone, we're just going to most likely see deeper moves to correct this, at least down into those lows. So that would be our analysis for US 30 there, guys. Okay. And if anybody has different analysis or something different to say, please say so in the chat, and we'll look at that and we'll make sure to analyze that together there. And then last but not least, we have our USD JPY. Looks like overnight we had a good amount of volatility, or we had price action. Let's just delete a few of these things because this is old. This is old. I'm gonna move this a little bit lower as well, just around right there. So we have still basically, I would say, the same zones with the new resistance. Dollar strength is still what's holding the most weight. So our bullish bias remains the same on USD JPY. We have this as our area of interest, which are these previous highs that we want to make sure we stay above so we can have further continuation towards the upside. And so we would look for either bounce plays off of this zone and rejections off of the 159.750s, or look to take trades above the highs. But again, with USD JPY, breakouts, in my opinion, I don't think it's the best move because it's just such a much slower moving market. So in these markets, I think it makes more sense to wait for pullbacks and be patient for those to take place. Because if you're taking breakout trades, even this right here that you see that it's like a breakout, you're talking about like 10 pips. Which again, it's nothing bad, but this is a 1 hour candle that moved 6 pips. You know, in hours later, you moved about, let's call it 20 pips. So we're dealing with a little monster, we can say. But keep in mind, you can still make a ton of money or lose a lot of money with Forex pairs. It all depends on the risk that you put behind these trades. Because you can still make the same amount of money you make on gold here with 10 or 20 pips, because you have a much larger risk at hand. But again, that's not the point here. I'm just trying to point that out so you guys keep that in mind. But yeah, really not much to talk about in terms of like USD JPY. We know we've been bullish since past over here, you know, when we were waiting for price to either give us continuations above the 159.4s or overall respect our bias at the 159.2s, which is what we got. And then you can see the extension of that move overall. So that all we're doing right now is looking to follow that bias. We're still bullish on the dollar. So that's really what we're going to look to continue doing with USD JPY. So we have gold done, US 30 done as well, and we have USD JPY. And then we have the 4 hour candle closing in the next 3 minutes. Ideally, this 4 hour candle closes below this zone. Ideally, that would be ideal because at least we have still a 4 hour candle rejecting that area. We know that that's not invalidating our bias, and we can look to continue looking for sells below those 44.66. Price action right now had just reached that area, and once more we're rejecting that, and we're rejecting that precisely. Like, look at that candle closure on that, precisely still staying below that zone. So in terms of rejections, this is what we want to see. All we need right now is volume, of course, in our favor. But overall, like those rejections, like this compare rejection play here versus a breakout trade on USD JPY. This rejection, let's say precisely, let's just say precisely, you have from those highs until these lows that just got created, that's more than 100 pips. That price just moved right now, right there. You get me? You talk about risk that you put at hand, and you're looking for rejection plays off of those highs. You don't have to risk much. You know, you're looking to risk 30, 40 pips because, you know, if price action is breaking above that area, you might as well sit out and be more patient and wait for those sells. So you have plenty of room. That was more than a 1 to 2, you know. So just keep that in mind, guys. But all right, let me let me go back to the chat here. Oh, and by the way, guys, that wide angle, the new one, is pretty dope, right? Looks pretty good. Let me just check one thing. Sorry, guys. Yeah, looks good. On gold, we want to get candles to start to trade below these lows that got created, the 44.55s. I don't want to see price action randomly start to recover on us. That's why I want to break I want to break below that area, because right now on the 1 minute time frame, following the little structure that we see right now, it's a little bit of bullish structure, obviously, as you can see, on its way up. We want to break that structure, that momentum. So that would mean breaking below here and looking for something like this to take place. You know, break below those structure points. But again, this is the lower time frame, so we're just analyzing that. Let me see. So fundamentals are data outside asset price. Your explanation is very valuable. I want to know, the main thing is to develop patience, please, if you can. I mean, patience is something that you genuinely just have to go through yourself. I think you teach yourself patience through being selective with your trades. Like every single session that you're looking to join or that you're looking to trade, just make sure you have already planned ahead how many trades you're willing to take. You know, win or lose. If you win, you should have rules set up where it's like, okay, if I win, I should stop trading for the day. I should stop trading for the week, right? Like that's a rule that you should have in your notebook. Not specifically that, but I'm just saying, like, there should be a rule as to when you win, you know what to do. When you lose, same thing, you know? So I'll give you an example. For me, if I take 2 back-to-back losses, I just call it a day right there, because at that point I've taken 2 losses. I'm most likely at already my limit for the day in terms of risk. And if I'm going into that third trade already can be tampered. You know, it can be already, my brain might be thinking revenge trading. I might be looking to over leverage because I'm trying to recover that. We don't know what demons get invited overnight. You know, maybe last night it was a bad night. Maybe today you didn't have that much of good sleep. Today you're just a little bit more, you know, groggy or whatever. You just don't feel 100%. That little chip in your head might get activated. The one when you take 2 back-to-back losses, which adds on to that stress that you already have. And therefore that third trade, you already know it's gonna be a bad one. You already know. So for me, it's kind of like, you know what? I've taken my 2 trades. I'm done for the day. You learn patience through that, I believe, because you now have to still sit in front of the charts and not take any trades. Like, even though you have the perfect setup in front of you, you've already taken 2 losses. Like, why weren't you patient enough to wait for that? Like, were those 2 losses necessary? Most likely they were not, you know? So it's like, once you reach that point where it's like, okay, I've taken 2 losses because I know I rushed into the market. I know I shouldn't have taken that entry before that 30-minute candle closed. So there I go. You know, now I have to punish myself and basically sit out and not take any trades. And I think eventually, through you practicing just sitting out, is going to be good enough patience. Another patience trick that I'll give you is wait for candles to close. So that means if your notebook and your system tells you that you need to wait until 9 a.m. to trade, you need to wait for the 15-minute candle to close after 9 a.m., then at 9:02, which is right now, why are you looking to take trades? If your rule book clearly states, do not trade before 9, and once it's 9, you still gotta wait for the 15-minute candle to close. At 9:03, you shouldn't be looking at the market eager to press buy or sell. And again, that reinforces in your head that no, I'm not gonna take a trade until I am allowed to take a trade. How you decide that is through having a rule book, right? Have that strategy set up, have that system set in place, so that way it's kind of like you want to remove the thinking when it comes to taking trades. You want to make sure when you take a trade, you're just doing something that you do every other day or every day. You're just looking for the same market pattern, same repetition. Notice how every analysis that we do, like now that we've been doing back-to-back analysis together, notice how we look at the same ideas, just different bias, different prices, but overall, same concepts, same ideas. We're not doing anything fancy We're not creating magical strategies. No, we're sticking to basics, the basic principles really of price action, and just sticking to those technicals alone, and that's what you follow. Again, with time, you will reinforce that feeling of just, okay, I need to be patient. And then before you know it, you're just patient. You're just waiting for the market to come to you. You don't force any trades. You're not doing any of that. That's the point that you want to get to. But again, you have to practice that. It's almost like you have to mold that into your brain. Because again, I, from experience, know what it is to get on the market and immediately look to take a trade without even really sitting down and taking my time doing my pre-market analysis, doing my reviews from the day before. Did anything change overnight fundamentally? Did anything change from, structure-wise on the technicals? I was more so just getting on key levels. Okay, I could take a trade here, take a trade here. Before you know it, I'm forcing a trade in the middle of a range, when I knew I should have been in a trade either above here or below here. It was one or the other. But instead I would be in a trade right here, just because I was like, oh, you know what? Price is gonna break out right here. And if it breaks out, I'm gonna take a trade. Or if it bounces, I'm gonna take a trade. And I didn't have a clear bias. I didn't really know what I was doing. The price would move. And now I'm there looking at that volatility, trying to enter the market. No patience, no real plan, no real structure. So again, you gotta make sure you teach your brain and go through those actions. That is how you gain patience, in my opinion. But again, that takes time. That takes months. That takes maybe even years, depending on how well you can actually do it. Let me see. Good morning, my friend Swole. Is that what I'm gonna call you? Swole? Negative aura for me, dude. Good morning, man. Good to see you once more. Do you market execute or set limits and stops? Now, I more so do market execution. I used to do a lot of limits, but then I had a bad experience with that one time, a few times actually, and I didn't like the idea of being in a trade without me entering and without me managing that risk along the way. I love my fans too. I love all my fans. That's funny. But yeah, stop. No, 100%, you're not lying. Look at how clean our live stream is, bro. Come on. You got multiple angles, multiple cameras, lighting. Beautiful charts behind, charts in front. Come on now. But yeah, going back to the question, with the limits, I think it's just a lot more, as a day trader at least, it's just better to manage your risk as you go. But anyways, talking about gold, let's just make sure that this 15-minute time frame that closes in 8 minutes does not get above this zone. If we don't get above that, we still have rejections in our favor. We still have price trading below our zone. We really just want to get that strong volume in seller's favor, and then obviously we can get that flush. That would be obviously best case scenario, but we have no control over that. We could just wait right now, not seeing any signs of strong recovery just yet. So unless we see like very strong push above, then at that point obviously our bias would get invalidated. But so far, still rejecting, still trading below, still showing exhaustion around that key area. So all we really need to make sure is we don't get those breaks above, and then we should be good. I got into some high risk sells before the 4-hour candle close at the 44.64s. Okay, where price is at right now, basically. Quick 1 to 3, manually closing my positions at. Oh, do you see that example that I put out earlier? There you go, Mr. Elijah. Good stuff, my friend. Following the plan. So some high risk sells off of these highs. Got out for a 1 to 3. I'm assuming you were risking very little then, which is good risk management. For this zone that you have, risking little is good, because any breaks above this zone, we don't know how far that's going to get. That's why I'm saying be careful if we get breaks above. If you start to see candles breaking above, I wouldn't want to impulsively break that and then we go up into the 44.75s and it like wipes out our stop losses, you know, if you're in any trades. So that's why it's like, again, we want to make sure we stay below that, but then now break below that area where you basically took your profit, which is a good zone. It was that medium point, you know, it wasn't the overall zone, but that's why right there, good example. Thank you, Elijah. That's why I don't give you guys signals, because again, everybody has their own specific plan. That's the beauty right there of holding each other accountable. Someone right there already took a trade, they got out, they followed their plan, they did what they needed to do, they can call it a day at that point. Maybe someone else is being more patient, they're waiting for the whole move to take place. You know, they have different risk, they have a different feeling of risk. But all right, 5-minute candle is going to be closing soon. This 5-minute candle on gold still closing pretty weak, not showing us any signs of strong buyers or strong sellers. Just kind of indecisive, still around that zone. We're still rejecting that overall area. This is what I want to avoid on gold. Like if it breaks above, this is only if it breaks above. If it breaks above, I want to avoid price getting above that area, but then faking out and then closing back below and then making the move. Ideally, we don't get the breaks. Ideally, if anything, price just goes and then continues. But again, we just have to be patient. So far, so good. Let's just see if we'll get any sort of volume going into like the pre-NYSC. Let me see this something real quick. All right, let's see. We have, so that's gold, US 30. Let's see if it's done anything. US 30. The only thing I don't like about US 30 in terms of the buys is just seeing, like, let me move this a little bit more. Like seeing where this precise candle body closed, it's below this area of support. That's what I don't like. Let me put this a little bit more precise. So you see how, again, the candle body is just below this one? I don't like that because that's basically signaling strong seller momentum. That means if we break those lows, then we could see that pullback. So ideally, this 30-minute candle closes bullish, but strong enough above that zone right here, which is also, you can see to the left, that way we have more of a chance of actually bouncing and at least reaching the 51,200s. Because if not, I don't like that momentum that we can see based off that candle closure. I hadn't seen how that candle closed, the 1 hour. It's a pretty strong candle closure. So that means be careful if you see price action below 51,100s on US 30, because you could have a sell-off from that area, at least down. Yeah, I would say so. Just based off that momentum, how that candle closed. Again, I hadn't seen that. That's the one thing I want to be careful with. 15-minute time frames, ideally also for buys, we start to get candle closures above. Right now, it looks like it's exhausting. So again, those breakouts below that area can become probable unless we start to get the candles closing above and the breaks above, like these candle wick highs right here. we want to make sure we get that on US 30. So that would mean breaks above here. Sorry about that. Gosh, breaks above there. So we want to get the rejections and the breakouts above here to really push out of that bearish momentum that price is on right now. And we can see the stronger push to the upside there. Would you do any analysis on NAS? Not for now. Just because we're already doing analysis on gold, US 30, and USD JPY. We want to, if anything, if you guys want me to add NAS, we'll do it, but for the upcoming week. So that way we can focus really on like this week on these main three pairs. If UJ, I think UJ is good to look at, but just as we can see, the moves are obviously a lot slower. So UJ might be one of those pairs that we can do analysis every other day and basically stay on the same thing. Unless like something changes fundamentally with UJ, or excuse me, with the dollar, then that's where we can go back to UJ and see if we have to do some more analysis on that, reanalyze that asset. But for the most part, I think UJ will be that pair that we can just look at and just let it be. If we want to look into like NAS, we can do that, but again, let's do that next week so that way we don't overwhelm ourselves with different asset classes or anything like that. But all right, you guys understood what we're looking for on US 30? I hope so. If not, let me know. I'm just saying, be careful with that bearish momentum that you're seeing. So that breakout could be probable if the breakout takes place. If not, we're still looking for bounce plays off of this zone, only getting invalidated if price breaks that area. So that would mean, let me see. Yeah, really just around those lows is where I want to be careful with. But all right, 15 minute on gold. Oh guys, and by the way, make sure you guys are not delayed. Make sure you guys are on the live market. I think you could just click the button, because sometimes I'll notice that, because I have the chat here pulled up, so I see the video as well. And sometimes I'll realize that it's not live and it'll be like a minute behind. So just make sure you guys are live. But all right, like I was saying, 15-minute time frame still closing below. It's still good because it's still a pretty weak bullish candle, because we're seeing bullish momentum, but it's still a pretty weak candle that got created. So that's good in terms of like, we want to see that bullish momentum die out that was pushing price towards the upside. So that way we can get the actual move to the downside there. And then we got another 15 or 13 minutes now until the 30-minute candle closes. And again, same thing. Ideally, we do not get any candle closures above. We want to make sure we stay below, as we did right here. And that gives us that increased chance of seeing a move lower. All right. Let's look at those lower time frames. See if we can break these lows and pick up on momentum. But again, so far, exhaustion's still pretty good. Still not showing any strong signs of buyers above our area. So we'll see if we can get that full move. Ideally also with dollar, we can get, I mean, the momentum is good on dollar because we broke above these highs on this previous 1 hour candle, which is good. We broke above these highs, we're back above into this price range, reaching these previous highs around the 99.5s, we'll call it. So momentum there is still good. Don't worry guys, we're just being patient here. We're watching price. If anybody has any questions, please let me know as we watch price action. We're gonna be patient because right now we don't have any economic data to look out for. other than these this PMI really. Factory excuse me, factory orders has been one to not have too much high impact from my experience. And same with PMI. From my experience, PMI reports, the only way I've seen a very strong impact off of PMI reports has been when it's very much above or very much below the expectations. And also below or above the 50 point. Because when you have these PMI reports coming out, let's say at 49, that's showing that the economy could be, or that specific sector is contracting. Below 50 means contraction with these PMI reports. Above 50 means more expansion. So if we're looking at the dollar and we see that we have a report coming out below expectation, so that means below 53, but also below 50, so at 49, we'll call it. That means, again, within that sector, the services, that's more on the contraction side. That's more pessimistic. The translation for that is more bearish for dollar because it's a bad report. It's a negative report. Think about it from an investor point of view. They see a negative report. They see that a specific sector might be contracting. That's not good for an investor. So that's where you can see some more sells take place on the dollar. If not, we would want to see a report above expectations. So for one, above 50, but in this case, above 53, because that's the market expectation. So that means 54, just to keep it simple. Obviously, you can see it comes out at 53.6. It could be 53.2, right? That's past the point. We're just keeping it simple. Let's say it comes out at 54. That means it's expanding. That's an optimistic report. That's only going to add to the dollar bulls and gold bears. Right now, gold, let's see if we can ideally start breaking these lows. If we can break these lows, I think some momentum can pick up if we can get below those lows. But I mean, so far, that's another push right there off of those highs. Elijah, I don't know if you took that trade again. I've seen you take 2 trades even after you win. Be careful with that. But I don't know, that's a clean setup. Spamming to give you my answer? What do you mean? Are you talking about like the quiz that I might do for the giveaway? Nah, don't worry, I'm gonna give you guys time, and it's gonna be a quiz of at least 3 questions. I'll ask you guys at least 3 questions based off topics that we've talked about. And whoever gives me those 3 questions correctly and first, I'm just trying to confirm if I'm gonna do a $200 giveaway or a $250 giveaway. But before I do that giveaway, which we can do it in in a few. Because I have a few things. I have a few questions I wanted to ask you guys that I had written out on my notes. But don't worry, I'll let you know. I'll make sure to give you guys that time. If anything, just make sure, so that way we don't run into any problems. Make sure that you guys sign up to the GatesFX. Because if you guys are not signed up to GatesFX, then I can't give you that money that you guys win. So, as you guys know, in the description, there's a link. Go to that link, sign up to GatesFX, and then once we have the winner giveaway, that person will give me their trading ID, and then that's where you're gonna get the funds, okay? So make sure you guys do that if you want while we're waiting for price action. Do that now, create that account, and then we'll do the giveaway in 10 minutes. I'm just gonna get the confirmation if it's 200 or if it's $250, all right? And I see when you guys sign up, so can't lie to me. Signed up over a year. Okay, nice. Yeah, then you should know what I'm talking about. You should have your own ID in the GatesFX. This right here. So I have my own ID. Everybody has their own ID. So again, when we have the winner, we'll just make sure to give me that, and you'll DM me, of course, and Gates specifically. And gold is giving us that move. This is over 150 pips right here off of those highs. Or 130 pips, my bad. Already signed up, okay, cool. Cool. Hopefully I'm asking the same question. So when we mark zones, they are on higher time frames, and market structure is based on higher high, higher low, lower high, lower lows. So I'll give you this answer in case you don't know too much about market structure. And again, there's no shame in that. When you have market structure, actually I can do that here. As we look at gold melt in our favor. I mean, come on, that's beautiful. But let's talk about the market structure and answer Marcia's question. So you're only focusing on higher highs and higher lows when you're looking at bullish market structure. So when you're looking at bullish market structure, and usually we'll look at it on the daily, the 4 and the 1 hour. I mean, we look at market structure in all time frames, but like the important ones where we pick our bias is usually the daily, the 4 and the 1. Anything below the 1 hour is usually what we do during session. Like we look at the 1 minute structure during session. So that way we can catch the changes in momentum and that sort of thing. But the important ones are the 1, the 4, and the daily, right? Like those higher time frames. We want to make sure we have the higher time frames and the intraday time frame structure, and those are going to be those key structure points that you focus on. But again, you only focus on higher highs and higher lows when you're in that uptrend, right? The uptrend, this is why we don't do trends, because it gives you the same answer. Trends and market structure gives you the same answer, except trends, in my opinion, is just a lot more basic. So that's why I don't use trends, because market structure already tells me the direction of the market. If I know market structure, I know what the trend is. And then the opposite happens. That's when you focus on your lower lows and your lower highs, right? And then you have, of course, your ranging markets, which is just indecision, where you have highs, lows, and there's price not doing anything. So to answer your question, if we're bearish, like we were in this case, looking at gold today, we're looking at lower lows being created and lower highs being created. This structure point that we were looking at today was a lower high point because price is more bearish. So we're looking at lows and we're looking at highs. We're looking at lows, we're looking at highs. We're looking at lows, we're looking at highs. Does that make sense? Because again, you're following bearish structure. So you're not worried about higher highs or higher lows when price action is bearish. Does that make sense? You can, here's where I don't want you to get confused. You can get bullish market structure within bearish market structure in different time frames. So where do we see that? For example, say that we're let me rewind it there. Let me give you the example. Say that we're bearish on the overall market structure, but the lower time frames can be bullish. Have you ever seen us do that? I'm pretty sure you've seen us do that, where it's like we're following, and this is an example of that, where it's like you're following the overall structure and you know that price is bearish. But you have these examples right here where on the lower time frames, if you analyze this, that's gonna be bullish structure on the lower time frames. Watch. Let me find it for you. Damn, sorry about that. Okay, boom. Right here. Let me show you that example in a way I can explain that to you and really get this. So what I was explaining to you was that, remember, structure, bearish, okay? You're following that. Even the lower time frames are bearish. That's when you see a ton of confluences in your favor because you have all time frames in your favor, right? But then notice after you reach this low, and it doesn't have to be this low specifically. It could be any low, it could be any high. But we're talking about this low specifically. If we're following structure, then what would we need to see? We would need to see, again, let's keep in mind, overall structure, bearish. But following it on the lower time frames, for this time, it was still bearish. Why? Because it's still creating lows and respecting those highs. New lows, still respecting those same highs. New lows, highs. Lows, highs, lows. But then look at how you break above that high point right there. That means that on the lower time frame, even though the overall structure is more bearish, once you start to get above price point, or excuse me, structure points on the lower time frames, you could start to then see the 1 minute flip bullish. From there, it goes to the 5 minute flipping bullish. From there, it goes to the 15-minute flipping bullish, till eventually you end up flipping bullish on those intraday timeframes. But you get the momentum change on the lower timeframes first before you see it on that bigger picture. That's why we follow the lower timeframe structure, because we get to see the momentum that is taking place during the specific session. So that way we're not completely blinded to the fact that the daily and the 4 and the 1 hour is bearish, and we're thinking bears, 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 but then the lower time frame shifts momentum and price action is then more bullish. And what do you do there? Because you're going to be lost. That's why we go on to those lower time frames. So again, you then see that bullish structure get created on the lower time frames. Again, still being bearish on the higher time frames, but now you have bullish structure on the lower time frames that got created. And you see, okay, well, where did this high come from? It came from this right here, these lows. That means that on the lower time frames, we got to get below this area to then be bearish along with every other time frame that we were looking at. Does that make sense? Because in my head, that is a perfect, beautiful explanation about market structure with the higher time frames, the lower time frames, and you got the example today right here, which is we were looking for price to reject those highs at that area right here on gold because of the overall structure and our higher time frame zones, our higher time frame structure. But as I was explaining to you guys, when we made these highs right here and we ask ourselves, where did those highs come from? It was around these lows right here, right around this area, which is these same areas. It's not a significant zone that we mark off, but it's still a medium point, for example, that we found. And so we know where we need to trade below for momentum to pick up on the lower time frames. And then you can see very clearly how once price got around that zone, more or less around this area, look at that momentum change right here. Now we just need to see further pushes below our new lows, and then of course overall break below our area of interest for deeper deeper sell-offs. But still, off of those highs for today, look at those beautiful, precise rejections that you have here, and that's a beautiful trade setup right there for you guys. I mean, that's over 200 pips, I think, off of those highs. Close to 200 pips, if not basically 200 pips, like 180, 190. But Marcia, did that make sense? Yes, you understand? Okay, there you go. It's like a connection. It's like, it's a flow of the market. This is the best explanation I can give you. It's a flow of the market, and you learn to follow the higher time frames. You learn to align that with the lower time frames. For the most part, from my experience, I've seen that when you can align all time frames together, that's when you get very good trade setups. Because you have daily in your favor, 4 hour in your favor, 1 hour is in your favor. Then you get lower time frame momentum in your favor as well. You have all confluences in your favor. Doesn't mean you're going to win the trade 100%. But it still confluences in your favor. And what do we do here? We look for probabilities to take trades. That's what we are. We're probability trade takers. High probability trade takers. Makes sense? I hope that made sense. Let's go to US 30. US 30 broke those lows like we were talking about, really. Let's zoom in while we were talking about this. Because it's still, the buy ideas remain the same, but above our zone. It's just tricky because of what I was pointing out. The way that this previous 1 hour candle closed, it closed very strong against this previous point right here. So the fact that it closed strong, that's why I was saying be careful if we do end up breaking those lows. So we did break the lows. Price action did move in our favor there. But our ideas still remain the same. That means look to take trades for sells below your key area, but at this point I would want to see some sort of deeper, or excuse me, some sort of further candle closures below, because right now you're seeing a 15-minute candle closing below. If this 15-minute candle closes back above, I'm thinking this is a liquidity grab and price is going to push towards the upside. If not, if we can continue to stay below this zone, so that means this next 15 has to close below, and ideally we get like this next 5-minute with this, which is closing in the next 1 minute. We want to see it closing below, and that way we have more momentum on the seller side. If not, again, I think this could be a liquidity grab. Buys above 51/100s still makes sense on US 30. The only thing that was really going against that was that momentum and obviously that breakout that took place. But if we recover that and we stay above the 51/100s, I'm thinking US 30 can have a push towards the upside into the 51/200s. And if we break that, we can probably make it higher. Let me see, where was I? I already have a GatesFX account. Okay, cool. Elijah, I didn't take it. I saw it making another re-entry opportunity, but I'm at work, so I just took my wins and ran. There you go. That's obviously the good decision to make, because what if the market went against you and you had already won? You're at work, so you're not watching price action, probably too focused. Maybe you are, but again, let's be real. If we're at work, our heads are elsewhere as well. So if you would have lost, that would have been such a bad loss to take, such an annoying loss. But you won, you got your trade for the day, you followed your plan, you followed your risk parameters, you did everything that you needed to do, you've done your job. Don't worry about whether price action, I know the FOMO kicks in, I know it does. But you, especially as a scalper, I'm talking to you specifically, Elijah, as a scalper, don't worry about those large moves that take place, because for the most part, as a scalper, you're not taking part in most of those trades anyways. So there's no reason to feel bad if you see the market moving so far away from your TP. If anything, that gives you more information in the sense that if you're taking trades and they're going good and they're winning, but you're still journaling your trades, remember, you're journaling your trades, so you have data and you have proof of what's working and what's not. If you realize that all your winning trades go and continue in your favor, like say all your trades continue in your favor when you hit TP, you don't go break even or you don't take losses. No, you get to TP and it goes, it rips. If you can see that that's a consistent thing that happens, what are you gonna naturally look to do? You're gonna naturally look to extend your trades, because that's what your data shows you. So that's where, again, as a trader, you continue to evolve and you continue to improve, because you see that, well, data tells me that every trade that I take and it hits take profit, it goes still well in my favor. That means I can adjust that strategy and look to hold my trades maybe 10 pips more next time, 25 pips more. Take it step by step. Don't look to just completely shift out of your strategy, but take it step by step, which in this case for you would be, well, if I see all my trades moving in my favor, I got to start holding this a little bit more. I got to give my trades a little bit more room to breathe. Or it could be the opposite. It could be the case where it's like, no, I need to continue to close my trades, because every trade that I take, it goes in my favor for the most part. And when they hit take profit and I exit, it always goes back to break even. So as a trader that you see all your trades go to take profit, but then after you hit take profit, it goes to break even, are you going to naturally look to hold your trades more? Or are you going to continue to just close out in profit? You're most likely going to look to continue to just close out in profit, because you see that every trade you take, after it hits your take profit, it goes back to break even. So at that point, you're like, why would I hold? If I see that every trade goes back to break even, I'm not going to hold this trade. But again, you're using data points that you get from your own journal. So that's why I tell you, don't beat yourself up when you see these moves. Because I know I've seen you already in this stream take some trades and then the trade rips and you're like, damn, I secured already. But like I said, I've had that feeling before. I know what it is to go from a scalper to a swing trader, and then I end up losing trades because I went out of my plan. So a winning trade then turns into a losing trade. That's what you want to avoid. So if anything, good stuff, bro. Good stuff. My time here says 9:29, but your screen says 9:23. You're talking about this right here. If that's the case, you are very behind, most likely. Just make sure that you're live on the YouTube. Because it should only be like a, I think it's like a 15-second or a 20-second delay, something like that. Just look at my time here precisely, specifically, and then look at yours, and you'll see how big the delay is. That's why I tell you guys, watch your own chart. Don't look at my chart. Look at your chart. Like obviously you can look at my chart to see the zones and all of that stuff, but for the most part, you should still be marking off your own zones, mark off your own trade ideas, your own analysis. That way you're not just 100% focusing on what I'm doing. But all right, we'll see. We'll check US30 again when the 15-minute candle closes. But so far, really only that strong push below. And then a full recovery. Oh my gosh. That volatility is crazy on US30. But yeah, above this zone, I'm still bullish on US30. Just want to see if this 15-minute will close above, and then that would be considered a fake out there. It's just in terms of entry, it's like, where do you put your stop loss? That's the question. You know, if you're looking for buys above, even sells at this area, depending on your bias, the stop loss is a little bit tricky, because it's like you want to put stop losses below lows or above highs. In this case, you have your lows way down here and your high is way up here. And you're going to take a trade in the middle of that. In terms of setups, I don't know how clean that can be right now. It can be a lot better later on, but right now, a little bit tricky because of that. So I would be cautious there with US30, just off that. Then gold, we almost made the full move down, but I mean, that's still almost or pretty much about 200 pips worth of price action from the highs to these lows. Picture perfect right there. Caught the impulse on US30. Nice. But all right, I think we're nearing. How can I do this quiz for you guys in a way that gives everyone a fair chance? Let me think about this. Give me 1 second. I have a few questions. I just don't know if I want to. Do I use fib levels? No. Just market structure. For the most, I haven't even pulled up a fib since easily 2021. That's crazy. Just because once I found out, I didn't know about market structure. So when I really learned about the importance of market structure and I was using fibs around the same time, I realized it's pretty much the same thing. Like it's the same data. You're looking for points of interest where you would want to see price action pull back into for you to get optimal buy or sell zones. Structure gives you that. So it's like, for me, really, my goal with trading, which was my problem at the beginning, it was to try and simplify trading as much as possible. I'm sure you guys have heard that before. The problem with my way of simplifying it is that meant understanding the markets at least a lot more than what regular traders did, which was understand the fundamentals. Understand the fundamentals and simplify that to the best of your ability to be able to connect that with the same technicals that you're looking at. So when it came to trading fundamentals and trading technicals, indicators became such a subjective way of looking at the market. It just like I would be using data from price action, which we can't fight price action. Price action, it is what it is. It's in front of you, right? It's the same for everyone. And then fundamentals. So I would get a bias from fundamentals, a bias from my technicals, and then the indicator would say otherwise. And now I'm conflicted because of an indicator. And then I'm like confused. So it was too much for me. So I would use EMAs, and it was just, again, I would have fundamentals in my favor, technicals in my favor. The freaking EMA is not in my favor, and now I'm like focusing on the EMA. And I'm just there sitting, looking at the market, and I'm just like, what the hell? I'm over here looking at this EMA. So then just little by little, with fibs, EMAs, this and that, the volume chart that I had at the bottom, I was like, bro, remove all this, man. Remove all this, just watch price action. Watch price action, and again, see how you can align that with fundamentals. And little by little, I just kind of like started to discover movements of the market. Like the one thing that really taught me a lot was studying the history of the market. Because when you're studying the markets, you're studying human behavior, right? So the markets is a lot more than just candlesticks. The market is really human psychology, you know? These support and resistance levels are, again, they're psychological points. It's areas where decisions were made. Even though the market is 98% or more of just pure machines trading and doing all of this, and like the retail traders or manual traders are such a small chunk of the market, that it's like, again, those models or those machines, they're built by humans, programmed by humans. So that's why you see these patterns take place. That's why you see these repetitions take place, because it's human interaction and it's human behavior over and over and over again. So you have similar scenarios take place across history, and humans will basically do the same thing over and over again. And it's like cycles get created. And I say that as gold is absolutely melting. And again, doing what? You see the importance of that? Keeping it simple, price action, fundamentals. We understood what we were doing. We're doing nothing different than any other day. And we've seen this happen before in other places, in other areas. Very much the similar thing. You get me? So again, it's not to try and go against anybody's strategies. It's not to say that indicators are useless. I'm just sharing you guys my own experience, and then to each their own with that. But again, it's just, that's what I learned. You know, the less noise you can have on this chart, the better. Like what I do already, for some people, if you really sit down and you show this to someone else that does maybe strictly technicals, they're gonna tell me I'm overcomplicating it, you know? Trust me, I've been told that plenty of times. But again, by people that are just simply not aware. They don't have the education or the awareness of the basics of fundamentals. I don't even consider myself to be the most expert at fundamentals, but I'm very much aware of it. I know damn well what's going on. I know the narrative. I know how that impacts the market. I'm not gonna sit here and talk to you about it for 2 hours, but we can talk about it for 10 minutes, and we can connect that with the technicals, and then we go and we let price action do what it does. You know, without forcing, without really, I mean, there's really nothing you can do. You get what I'm saying? So today, what do we have? Structure we were following, fundamentals we were following. We looked at the lower time frames. We saw how candles were closing. There you have it. That's from these highs to these lows, over 270 pips. Overall, the move today, almost 400 pips, if not 400 pips, from highs to the lows that just got created. Show me the other stream that does this. I'm just kidding. That's funny. But now, guys, let's go on to US 30 because we had that 15-minute candle closing. 15-minute candle still closing below. So in terms of buys, no sort of validation there. We're still closing below this area. That means sellers are still more in control, still more momentum on the seller side. Below 51 100s. Let's just continue to look out for new lows being created. Maybe even a correction of this move if we continue to break these lows there. So, but all right, guys. What else? USD JPY, right? We're gonna do the giveaway, the quiz now. Yeah, USD JPY really nothing because it was kind of just around this area. We were bullish on that, but obviously we didn't get any pullbacks. We haven't gotten any breakouts, so really not much there. Just all right. So we're gonna do the giveaway. I'm just gonna find a way to put the questions up. I wish I could like pause the stream or something. I gotta find a way to pause the stream, but it's all good. Let me just look through my notes here. This is funny. I mean, come on, this is a quiz. I know it sounds silly, but like I said, we're here to learn, we're here to improve our game. And just by having basic knowledge, you guys can literally get $250. So we're gonna do a $250 giveaway. And again, you just gotta make sure that you're signed up to the Gates FX. So I'm gonna put up some questions here. I'm gonna ask the questions, okay? I'm gonna ask the questions, and then I'm gonna give you guys time to like write it down, or I'll write it out with you guys, if anything. No? Well, or how do I do it? I'm just, like I said, I'm trying to make it fair for everyone. But all right, let me know when you guys are ready. I'm gonna ask the first question. We'll do probably like 2 fundamental questions and 2 technical questions. Very simple, guys. We're gonna keep it very simple. These are things that we've talked about during stream. And again, the first person that can answer those questions correct, those 4, or at least the one that gets the most right. And this isn't gonna be multiple choice. This is gonna be something that you have to think of. And I hope, come on guys, let's not cheat, please. Let's not. I will be able to tell based off the answers if someone went onto ChatGPT or if someone went onto Google and looked it up. Just by the answers, I will 100% be able to tell who looked it up and who didn't. So I'm gonna ask the questions, but please let's not cheat. Let's keep it fair. Actually, you know what I'm gonna do? Here's what I'm gonna do, guys. Here's what I'm gonna do. I'm gonna write out the questions here. Okay? And the first one to give me all of the answers on the chat first and correct, that's gonna be the winner. So that means watch my screen as I type it out and then be ready to put your answers. So that means look, please don't cheat, bro. Come on, guys. Let's not do that. Let's not finesse here. Okay, you ready? All right, cool. I'm gonna start it. Fuck it. I've already said it too many times. This is just funny. All right, so we're gonna add the text. Let me just get the box open. Hold up. There you go. All right. Pay attention, guys. We're gonna keep it simple. All right, I'm just looking at my notes. Let's see, why do traders pay attention? So that's question number 1. So question number 1 is, why do traders pay attention to FOMC meetings? That's question number 1. These are our 2 fundamental questions right here. And again, I don't want to see any answers yet. Wait until I put the 4 questions. Once I put the 4 questions and I tell you guys, okay, send your answers, then you send it. Whoever sends it first is going to be the winner of that. The third question, which is the technical question, a break and close above resistance is considered, then you answer. All right. Send your answers. I have right here. You gotta send the answers all together, Elijah. All together. So that means put it at 1, put 2, 3, 4. These are your questions. I will 100% be able to tell who put ChatGPT and who isn't. Because these can be answered in one word, some of these. So number 1 would be, why do traders pay attention to FOMC meetings? Number 2, if CPI comes out higher than expected, what is the general reaction to USD? Number 3, a break and close above resistance is considered. And number 4, why is risk management important? So let's see. Now you gotta give me 4 different answers, Edward. AD, for number 1, you're missing one thing. But AD right now, so far, he's the closest one to being the winner there. See, I'm gonna wait for a few more people to put it up. To be fair, I'm not gonna say who has something right, who has something wrong. I'm just gonna see who can actually give me all the answers. If that means you gotta, or sorry, Audrey, if you gotta resend your answers again, in case you don't know which one is right or wrong, then do that. But let's see. Let me read through this and we'll get the winner here. Audrey, you were close, but you know. Bleak Crisp, you got some right, but not all of them. Let me see, Kim. So far, nobody has gotten all of them right. Let's see. I want to see if someone can get them all right. If not, then whoever has the most correct, we'll pick it. We'll give it until 10. We'll give it until 10 a.m. So you have another 4 minutes to send your answers. And then from that, $250 giveaway on the broker of Gates FX, okay? And remember to send Edward. I see you put a few different answers. Put all your answers in one message so I can see that. And I'm reading them in order. Whoever the first one I read in order that got them all correct, then that'll be the winner. We have until 10. If not, at 10 a.m., I will reread everything and see who actually got them right. And we'll obviously talk about the answers, of course. Remember the questions. Why do traders pay attention to FOMC meetings? So think about what goes on during these FOMCs. Second one, if CPI comes out higher than expected, what is the general reaction to US dollar? So to USD. A higher inflation report means what for the dollar? It's another way of asking that. A break and close above resistance is considered, that's a one word answer. So if you have more than one word, that's not it. So break and close above resistance is considered, boom, one word. And then the fourth one, it's very important. Why is risk management important? Why is that? My FX note, that answer is looking a little bit sus. I see your answer. Come on, guys. You almost, a few of you got it, and then you like fuck up on the others. Damn, I thought more people would get it. They're not that hard, guys. You gotta just think about it a little bit more. Because some of you got it, but then you don't. You know, I can't just give away money like that. Yeah, like I need to, you know. All right, it's 10 a.m. guys. One more minute. I'll give you one more minute to send the answers. If not, I'm gonna pick the closest winner. I'll tell you right now, AD. No. I think I have the winner. Even though they got one wrong. They got 1.5 right, or half of one right. They have one wrong, one right, and then one right. That's so far the best one I got. All right, I think we have. What the fuck was that? Nah, guys. All right, I'm gonna have to give it to Audrey, I believe, because he sent it first. Because right now the answers that you just gave me, how can I change my name in GatesFX? I don't know, my brother. I would contact support for that one. I don't know about that one because I know that has to do with verification and stuff. So yeah. I would just contact support. If not, hit me up on gatesfx.en Instagram, and then we'll be able to help you out. AD, Audrey, it was Audrey. Yeah, guys. So I'm gonna give it to Audrey, and let's talk about his answers. Let me see where they go. Because, let me see, the answers that I got, where'd they go? Oh, right here. So he was the first to answer, and he had the first one correct by half. What I was looking for was, so why traders pay attention to FOMC meetings? It's typically for interest rate decisions, which is what he put. The other answer I was looking for as well is the Fed guidance, right? The meetings, what they're going to talk about for the upcoming meetings, the current outlook of the economy. Are they focusing on inflation? Are they focusing on the labor market? Are they focusing on the war in the Middle East and the impacts that has brought to the market? So the right answer is that. Interest rates, Fed guidance. So we'll write it out and everything. So that way we can even have that here. So we'll put Fed guidance and interest rates. That's question number one. This is the one that you got wrong. If CPI comes out higher than expected, that means a higher inflation report, the general reaction to USD is going to be more bullish, guys. That's a few of you actually got that wrong, which I was surprised because that's literally what we have been talking about almost every day. We've been talking about why the dollar has been bullish because of those inflation pressures that have been introduced to the market since the war in the Middle East has started. So the fact that there is now a chance that inflation is higher, and we have the chance of the Fed becoming more hawkish. So we go back into the FOMC meeting. We have the chance of the Fed being more hawkish. That is going to be more bullish for USD. Does that make sense? So again, I don't think I saw anybody that put that correctly. So that was the right word. It's going to be more bullish. This one, same thing. Tried to do it on purpose like this because a break and a close above resistance is considered, what do we talk about every day? Simple, one word. Bullish or bearish, that's it. A break and a close above resistance would be something that's considered bullish. That's it. That was the simple answer that I was looking for. Again, Audrey, he got that right. And then the last one, which is the hardest one in my opinion, because that one, you could really go anywhere. He also put the right answer, which was really to protect capital. That's why risk management is very important. He put save capital, protect capital, save capital is pretty much the same thing. So those are our 4 answers. Audrey, he's the first one to put that. He got 3 out of 4 correct. So Audrey, you already know. Just contact me. You have, so you got gatesfx.en, and then you got Tarzan Trades. Those are IGs. Those are the Instagrams right there. So just hit me up and make sure you give me your ID, so that way I can give you that. AD, you were correct, but he said it first. That's why I picked the winner, because I saw that you basically had very similar answers, but since he did it first, then that's who I'm gonna give it to. Oh, and also you got one wrong, which was number 3. You put breakout. This was a break and close above resistance, considered bullish. He put bullish, so he got it. So yeah, Audrey, congrats. Let me see. Desi Trader, just you'll see the support in the right here. I just showed you right there. It's on the top right of your GatesFX dashboard. Yeah, a lot of you guys, how come you put, I saw a lot of you guys put USD bearish for this. Did I write it wrong? Hold up, let me read it again. If CPI comes out higher than expected, yeah, higher inflation report. The general reaction to that is bullish. Yeah, 100%. I was just making sure. But yeah, nah, AD, you were like almost there. A little bit quicker and you would have gotten it. But Audrey, you got that. So good stuff to you. Again, just make sure you hit us up. Let us know, send us your ID, and then I'll make sure to get that out to you ASAP. So that was not bad. Not bad, guys. I appreciate you guys for tuning into the quiz there. Yeah, next week we'll do another giveaway. I think at this point, the way that we're going, guys, making sure we're gonna keep it consistent. As you guys saw today, we make sure that we're, composed, we're professionals at the end of the day, making sure that we're prepared for these market moves. Today we had great moves on gold, following our analysis precisely, rejecting our areas of interest, and then moving about, what was it again? From highs to all the way to the lows, basically more than 375 pips, almost basically 400 pips. Like I always tell you guys, I don't say that to boast. I say that more so to point out the opportunities that we're given, excuse me, that we're given during the market hours. Excuse me. Gosh. It means I gotta stop talking. But yeah, Audrey, good stuff, man. I appreciate you for tuning in. I've seen your name pop up a few times. Ideally, I was looking for that, for someone that I've seen in the chat a few times. I was rooting for some of you guys, but we have to be fair. We have to be fair. We have to be correct. Next week, today was a quiz. It was a little bit tough. Next week, I might hit you guys with one question. The first one to get it, we'll get that giveaway. So we'll do always $200, $250. Today a little bit more because it was a quiz. A little pop quiz. I mean, come on, bro. Pop quiz. Who else is doing that on live streams? Who else is doing pop quiz, giving out money, giving out game, giving out money? Like, come on. We're doing good stuff here. That means share it with your friends. Tell your friends about it. Subscribe. Hit that like button. Show some support, guys, so that way we can continue to grow and we can continue to take over this trading space here. So we do good work. We do good work, so we deserve to have more people aware of the work that we do. So now let's go back quickly onto the review and then we'll call it a session. All right, guys? So if anybody has any questions, make sure you point out or you give them out now. And then we're gonna do the review and we'll go ahead and move on with our day and come back to trade again tomorrow. All right, guys? So again, with gold today, we're following the bearish structure. We understood our fundamentals were still more on the bearish side. We just needed for price action to remain below this area of interest, which we got with candle closures closing in our favor, making sure that they rejected that area and closed below that area. The next area that we were looking at was this area of support that got created. And as you can see, we've rejected that zone. We pushed a little bit lower, but the candle closure is above the zone, signaling to us that there is some pushback from buyers. My goodness. Damn. Excuse me. Sorry about that. I almost choked. We reached the area of support. We've gotten to those lows, but again, we failed to really close below to show us that strong momentum. So I would be cautious of any pullbacks off of this zone here, possibly back into these highs. Again, this high point right here remains that structure point that we can look at as our main area to stay below in terms of market momentum. And that way we can look out for easy trades to just follow the overall bias. If we follow the 4 hour, we can see that that would be basically just a previous 4 hour candle high, where ideally, again, we stay below that. So that way we don't show any signs of reversal against this bearish structure. Because if we break above this wick high, then that means we have rejections off the lows, breaks of previous wick highs that can build some momentum and push back price higher, possibly back into these 44.95s, where I would still be on the lookout for sells below that area, okay? At 4,500 really still remains that zone of interest, where if we're trading and closing above that area, then as we've seen in the past, watch out for deeper moves to the upside, as you see it here, as you see it here, here, right? You see it multiple times above the 4,500s. That's when you have that real shift in that structure there, we can say, or in the market movement. So that's where I would say probable buys are a lot easier above those 4,500s. Anything below that, I would just be waiting for pullbacks to then looking to sell the market there. So that's for gold. US 30 was tricky because we were still bullish, but we pointed out that for us to remain bullish, we had to stay above this area of interest, whereas we can see in this candle, we were closing just around those lows, just below these candle body lows as well, so signaling to us that the momentum of the sellers were still strong. That's why I warned that if you get breakouts below that zone, based off this current momentum and how we know the volatility and volume works with US 30, we could see at least a decent push towards the downside, and that's what we got, because we did not have any further candle closures above. Like, for example, the 15-minute time frame that we were waiting for after the breakout, we understood, okay, if we start to close back above, this could be just a liquidity grab and price action can continue to push higher off of that area. But the fact that price action just left rejections and closed below that area and still failed to trade above that zone still made it more probable for sells to take place, and then that's what you see right there. So again, you see how it's the same concepts, same thing when it comes to the technical concepts, technical ideas. We simply follow and we react to the market. So again, both US 30 and gold. US 30 went a little bit above, against our bias, but still, like I always tell you guys, it's not about being right or wrong. Just adapt to the market, to what the market gives you. Don't force setups. Don't force a bias. Follow the market for what it is. If that means you need to adapt and look to take other trades, do that. If that means your bias got invalidated and you can't take any trades, then do that. If it means that your bias got validated because maybe you wanted to look out for sells, this is what you were looking for, then for those people, we can see that's what was more probable. That's what paid off for the day. So again, it's not about being right or wrong. just about market awareness and understanding those reactions there. And then last but not least, we have UJ, which reached the resistance and has given us another rejection, pretty strong rejection, which we're getting right now. A little bit of weakness on dollar, same time that UJ is reaching this area of resistance. Overall, we're still very bullish, even if we pull back all the way down into the 159.750s. So still remaining bullish there. All right, guys? Follow the market for what it is. Follow the market and take for what it is. 100% agree, man. Let me see. Audrey, are you a girl or a boy? I apologize. I just don't want to, you know. But all right. And just hit up customer support. They'll be able to help you out with that. A girl. Oh, okay, nice. Audrey, well, it's good to meet you. Congrats on the winner. Last week we had Elijah won. I was afraid Elijah was going to take that from you guys. I'm not going to lie. I don't know if it was, I didn't think about it before, but I thought Elijah, when I saw his answer, I was like, damn, he might win that again. I was thinking like maybe not letting him participate because he won last week. But then at the same time, how is that fair? If I'm asking you guys questions and I want to see who is paying attention and who is not, if Elijah got it, then I was like, damn, well, that would have been right there. Like we would have made like $500 just by joining live streams, you know? So I was afraid there, but I had seen Audrey's answers from the beginning, and I just wanted to see if someone else got all four correct. Nobody else got all four correct. Everybody else had a little bit of different answers there. So it is what it is. Audrey, she got the win. Now at least I know. I apologize if I did not know you were a girl before. But again, good to have you guys, boys and girls. Good to see that with the markets don't care. Markets don't care. So for the most part, again, all we got to do is continue to follow what we do. It's price action, fundamentals. Tomorrow, guys, we have jobless claims being released. Right? Yeah, jobless claims. And then from there, we'll have on Friday, really the important report that we have to look out for is NFP and the unemployment rate. Before I leave, today's report, the PMI report, came out higher than expected. So this is still more in favor of gold or of gold bears and dollar bulls. So if dollar can remain above the 99.4s as well as gold remaining below the 44.66s, we're still going to remain bearish on gold. The current fundamentals right now are not going against that. So unless something else happens behind the scenes, like something going on with the war or something like that, I would expect for gold to continue rejecting this zone and then continue pushing further. All right, guys, I'm on it next week. Yeah, you guys got to watch out with Elijah and Audrey now, because we want to see some new winners. We want to see, you know, people that are joining. We don't want to see only Elijah winning or only Audrey. We want to make sure that next week for that quiz, or maybe it'll just be a random attendance check, like, hey, let me see who's in the chat that I can notice from last week, you know, things like that. So again, we'll be doing these giveaways weekly. So again, make sure to share this with your friends. Let's have more people join. Let's have more people, you know, tune into our streams. That way we can have more ideas to play off of. All right, guys. So thank you guys once again for tuning in. I will see you all tomorrow. Have a great